Hi, I'm Ann Garcia. As the college financial lady, I've helped thousands of families save millions of dollars on college. It's tax time, which means it's time to claim education tax credits you may be eligible for. Currently, there are two tax credits available to help defray higher education expenses: the American Opportunity Tax Credit, which goes by the AOTC, and the Lifetime Learning Credit. Each is slightly different, but for most families, the AOTC is the most beneficial. The maximum annual credit you can get is $2,500 per student, and that's determined by 100% of the first $2,000 of qualified higher education expenses, or QHEEs, and 25% of the next $2,000 of QHEEs. It's also partially refundable, 40%, meaning that if the credit reduces your tax liability below $0, you can still be refunded up to 40% of the remaining credit. To claim the AOTC, you have to meet a couple of requirements. Your adjusted gross income needs to be below $160,000 if you're married filing joint, or $80,000 if you're filing head of household. There's a phase-out range up to $180,000 for married filers and $90,000 for head of household. Your student also needs to be an undergraduate enrolled at least half-time for at least one academic period beginning in the tax year. You also have to claim the student as a dependent on your tax return. You need to pay $4,000 worth of QHEEs in the calendar year for which you're claiming the credit from a non-tax advantage source. That means that it can't come from your 529 or Coverdell ESA. You can get partial credit for expenses less than $4,000. In addition, you can only claim the credit 4 times per student. So if you've already claimed it 4 times, you can't claim it a 5th. Note that with school years not aligning with calendar years, your student will be a college student in 5 years in which you file taxes if they graduate in 4 years. This might all sound reasonably straightforward, but when the time comes to claim it, you may find yourself pulling information from multiple sources or inadvertently following incorrect instructions. Unfortunately, a lot of tax prep software programs don't provide good instructions for claiming the AOTC, so it's a good idea to pull up the instructions for Form 8863, which is the tax form you file to claim the AOTC, and review them before filing. Your tax prep software might prompt you to only enter amounts from your Form 1098-T. That could be incorrect for 2 reasons. First, if your 1098-T has box 7 checked, it's showing amounts billed during the calendar year, which may or may not correspond to amounts paid during the calendar year. The AOTC only applies to amounts paid. Second, your 1098-T only shows tuition and fees paid to or billed by your college net of scholarships. QHEEs for the AOTC include course materials like books, supplies, even a computer and internet access. Students who receive substantial scholarships might have less than $4,000 on their 1098-T, so families shouldn't overlook these additional expenses. Form 8863 tells you to add your QHEEs, that's tuition, fees, books, and supplies, then subtract the following to determine your adjusted qualified education expenses. Number 1, tax-free educational assistance, including scholarships and grants, which would include a Pell Grant. Number 2, tax-free employer-provided educational assistance, and finally, any veterans educational assistance. Next, you need to subtract the amount of 529 or Coverdell ESA distributions that were used to pay those expenses. Don't subtract your total 529 or ESA distributions, because some of those might have gone to pay for room and board. Room and board are acceptable uses of 529 funds, but they're not eligible for the AOTC. The unfortunate thing I've experienced with tax prep software is that it simply asks for the amount on your 1098-T, and then it asks how much you took out of your 529. In many cases, it then shows you owing taxes and penalties on the 529 distribution rather than being eligible for the AOTC. Here's another tip from the Form 8863 instructions. If your student receives enough scholarships to cover their tuition, such that they don't have adequate QHEEs for the AOTC, they can choose to claim $4,000 of scholarships on their tax return. Depending on the student's other income for the year, this could result in $0 in tax liability and allow your family to claim the AOTC. If you found this information helpful, you should check out my College Financial Plan Masterclass. This self-paced course helps your family create a plan for an affordable college education, and check for the discount code at the end of this video. Thanks for watching. I'm Ann Garcia, the College Financial Lady and author of How to Pay for College.